All right, good morning, everyone. So, welcome back to another stream. Today's Tuesday, August 19th, and we're stuck in consolidation. We have two liquidity pools of interest located on the buy side and on the sell side delivery of the program. And yesterday, what I wanted to leave off was that I ended up coming back here for the PM session, and I still was aiming for that buy side up to here on the New York AM session. You can see it in my video that this is the liquidity pool that I was favoring, as well as eventually reaching up to the London buy side liquidity pool. But um, it was very, very choppy, as you can see. Like, who would want to go in there and trade live money with this, right? Right? I mean, it'll make sense, but yeah, super weird. But eventually, after the 6 p.m. new day started, price expanded aggressively, going up higher, tackling these buy-side liquidity pool. Now, I have marked this out as a miniature sell program. As I was saying, I have marked this out as a miniature sell program so that price can continue to seek lower prices while it's inside this higher time frame discount program. Buy side delivery program is what I keep saying it. So it needs to keep going down into discount to acquire more sell stops so that smart money can accumulate more longs positions so they can take it up higher. But just look at this choppiness. And this has been something that has been affecting my mindset going about these past couple of days. Just look at the constant back and forth of transactions that's been happening. It's been high resistance every day, and it's so challenging to go in there and seek for opportunities around these times. Uh, we had that transition over from, in comparison to the July price action. Look at how the expansions were aggressive, going up and down. And then we entered August, and as soon as August started, literally, it was just quick price action, and then suddenly just choppiness, man. So, um, yeah. So if we're in this buy program from low to high, right? So we're seeking for entries to keep going long, right? Keep going further up. But as prices continuously going down, we're looking for old sell side liquidity pools that price can have like a cracking correlation with its other sisters. Keep referring to them to sisters, but there's the US 500, US 30, and in order to take price to keep going up higher. In the meantime, it's been creating its own internal liquidity pool, in its own leg. So from like yesterday, we had this that was reacted upon as turtle soup, took us up higher, reacted off intraday buy side liquidity, and then now we're stuck in this consolidation again. um, there are two sides that are currently being supported or in favor of seeing a trading too, so that's not prone to high probability trading, now is it? So, not to mention, we also have FOMC later in the week too, so that's something to look for. That's something to look about too. We have it here listed for later in the week. And in the higher time frame, I keep seeing these balanced price blocks that like price. So we should support price to keep going up further. You see here, we were up after 5:45 this morning. Price was using this as support, and now it's aggressively repricing down lower. Not exactly something you want to see if it is a bullish breaker, right? You want to see price continuously expand up higher. So if it's not going to do that, one possibility is that it could be looking to seek lower prices. Yeah. So we're in deep. This is the buy program I was telling you about, low to high. So if we're gonna have all these bullish breakers fail, um, I would like to see price just trade aggressively lower. And there's nothing else that's on the sell side business other than these lows that were created this morning. But I'm also talking about the London close old low that we haven't yet referred back to, and it's been such a sloppy way down. Okay, let me refer back now to my 15-minute here. But something else that I'm interested in is that I was seeing how price reacted off here of the Asian highs. We saw a reaction occur in MNQ where the futures market didn't dare to tap this old high here for Asia, but in CFDs we did. So that's interesting. And then something else even before that is the reaction of this high, which I told you guys was the liquidity pool that I was eyeing for yesterday. The fact that we tapped it up here, right? But there were other markets where it was there was Dow Jones that didn't dare touch the AM highs from yesterday. So that in itself is also something to consider in the form of SMT, right? But I just want to point out something about this high that was created, because this high is actually a low point, and it's actually a favorable high that can help us create that phantom leg to keep going lower. So if we're gonna have a miniature sell program, right, and we had SMT here on this high, we could anchor our fibs from low to high here. And this is actually something that I was doing this morning as well. Anchor your fibs up to here because this is the breaker, right? Whereas the US 30 or the Dow Jones failed to create that higher high. On ES and on NQ we did. So we wait for what? Expand, close below 25%. Okay, did we have a close below? Yes, we did. And then price retrace back up. Our entry could be a sell stop on the 25% or look for an order block somewhere up here. Okay, right there. Okay, so we broke below it, traded up above it. Order block would have been up here, but you could also enter at the stop at the 25% and then let that thing rip down lower to external range to head down to these lows. By London session, it was held back, retraded above again. So, and then now look, now we're back to these levels. Now the thing about these levels is that if we're going to reverse up higher, what could we see in price? Well, we have some sell stops that we can react from. And right now, what's interesting to me are, look at this, these lows. Okay, the lows from London session. See how we see how in US 100 we didn't tap anything. US 500 we didn't tap anything, but the Dow Jones did. So that's also prime for S&T. Okay, so I'm gonna label it as such. So essentially, there's nothing here or any good barriers here to protect these old lows from stopping price to keep continuously going down lower, if that's what we're gonna see. And now we're gonna update our markings because now it's 9 o'clock, right? So we have here a Okay. $23.68, 7.2. And then lastly, there is the 940, 930, 830, sorry. Okay. Can you move to the side, please? So what I'm trying to say with these blocks is that at this certain unit time cycle, I would like to see the price react from it so that it can continue aiming for its external range liquidity. Right, so for example, let's take the this red one, right? So it's MI down. So to me, I see this as a failure swing. That price then failed to create a higher high related to this high back here from 830. So to me, this is I consider this a failure swing. But the way that price behaved down here, creating that low to high, that to me here, although you see a volume imbalance, I still do see this price action as balanced. So it's a balanced price range. So price should not have any trouble challenging this old area or zone, whatever you want to call it. And if price were to trade back up here again, it has until 9:15, which is the time cycle ending, so that price can react above its old high, which is what I like to see because it's split apart from something that's strong. So I like to see it react up at its old high and then continue reaching its external range. The external range for this 15-unit time cycle is the low down here. I'm sorry, excuse me. It's actually the yes, it's this low and then this high. So you see that we've actually broken out of external range low. So something that I've been considering options, or I mean as well, is the treatment of that external range whenever we expand above it or below it. So since we've traded below it at this time, look at the lows here created on US 500, low, lower low, but look at the lows on US 100, low, higher low. So that would be just suspiciously the reaction of SMT. It could continue to go back up to challenge that old high or to challenge even this balanced price action too, which we've had on the 30 unit cycle, which is a higher time frame time cycle, and that actually takes more of a priority and forms of strength to support price going down lower if that's what's going to do. And there's many different variations, right? There's not a lot actually, but it's just a couple of variants, and trying to see how each of them affects price. It's kind of like placing a trap card or a magic card. A card has like a special effect, and so each one of these balanced price action formations each have like their own special effect and can be interpreted as such, so that it can help guide you into seeing where the market wants to go. So over here, that's kind of like how I saw a trade occur here on a believe it was a breaker. Took the block going up here, reacted up 50% of the medium threshold, and then expanded up higher. It was met with high resistance, but then um, Tuesday opening or Monday opening, it just expanded up higher to reach the ultimate liquidity pool, which is kind of like how I've been trading recently. Just using the structure that has been at play at hand, and how is that structure helping us form a trust or a confirmation that price is needing to reach up to some form of liquidity. That's why I refer back to these old areas of liquidity where price is not treated to yet, or if it has, but it has to be referred to by this market, because other markets like the US 500, US 30 can refer to certain liquidity pools that we haven't yet. And when it does that, there's certain effects that take place, like SMT, but it also makes it like much more trusting for me to trust the fact that we're going to head down to a certain direction. So you see here, in this case, because we've been reacting up these old lows, price should have no problem to continue to keep going down lower, which is a shame really, because I really would have liked to have seen it going up to these highs. And I don't really trust this low to have any particular strength to push price up, because we're relying on the lows made from this leg, right? From this leg low to high, because that was the inception of the buy program. So any low created here, even if it reacts off SMT, is I wouldn't trust it. Instead, actually, would probably trust it as turtle soup, if anything. Just curious here. So if we're gonna trust it as turtle soup, then the following logic should play out as follows, like this. Percent go up higher. Oh, interesting. Dollar here has been seen as stuck here in consolidation as well. Interest rates, they're retracing back up here to a balanced price range. Bonds tracing down lower at the moment. So we should be seeing higher expansions on the dollar, but I'm not seeing that even though interest rates are going up. Okay, so it's 9:16 now. What kind of composition do we have? Okay, we have a high to low, lower high, lower low. Still the same thing. No, the reason why sales wouldn't be like really good right now is because remember how price reacted up in this particular high and we had our quadrants here lined up? We want to be taking shorts on the premium end of it, so up here. But we're now in that discount area related to this low to this high. So opened up here. Okay, first presented fair value gap up here. This particular 15-minute block. What I do like about this SMT low to lower low here is because we tapped not only an important sell side liquidity pool, right? It's 12 a.m. But we also reacted in a way of a SMT, so it could serve to us as a minor retracement upwards, possibly aiming up to the CME open. Doesn't want to get out of that range that we formed, right? Why? Because in the higher time frame, there's lots of balanced price actions that supports the idea that this should go up higher. For instance, we have that failure mitigation block up here, which was the lowest point here is on 1245 from yesterday. Right, so this low, we had a low, higher low. So this low, this high to this low here is all balanced with sell side delivery, buy side delivery. This whole thing is our block. Okay, and we've been reacting above, below it, just below its medium threshold here, and now we're below its medium threshold here. So now there's also some discount liquidity pools reacted off SMT as we saw earlier, and seeing that will showcase us more support speed, right? So we're also at the end, almost at the end of the 9:30 expiration 15-unit time cycle, which will end as soon as the stock market opens up, as well this as well. So I'm just gonna go ahead and get a little ahead of myself, see what kind of price action we have, and immediately I see a low. excuse me, I see a high to low, lower low, lower high. Yep, so we see this as a breaker again. Okay, so it's going to continue to go down lower. So we would have wanted to see that high be the high to act for us as turtle soup to head down lower here. Right? But the reason we didn't support it is because it's in the discount side of things right now. Okay, there's that reaction we're looking for. Something like this. Oh, not even 15. Oh, wow. This is really tight. Okay, so then we can set our stop as possibly six handles. Okay, so notice how we acted as the support. So we broke above the old high, and then we used that old high here as reference. Wicked down below it once, twice, kept going expansion higher. We're about to see the stock market open up in a couple of seconds. And immediately, my eyes see in this breaker. Okay, something like this to form. Okay, and then where's the actual true breaker? This little price action right here. And then for you, it will be a dealing range. And there goes the stock market going up again. Look at that sudden swing in price action. See how I use that bullish breaker? Now we're going to see if that will take us up here to CME. I wonder if we'll complete the mission and finally head down to these old lows now. See how there's two sides right now. This is not high probability. Oh, there we go. There we go. Reaching down to those lows. Where was that breaker here? We have this as a dealing range down, breaker sell. Right here's the breaker. We'll reach them out a bit. What is that? This is our bearish breaker. And look at how price didn't even challenge the mean threshold of that. Very good. So we've completed that miniature sell program that we had here. Low, high, cross below 25%, traded down, had to retrace back up to that level to acquire more buy side liquidity. Okay, because we had some here. Left down low. So slowly approaching that London close. I think I've been saying this since like last week. We might be heading down there. It's like so choppy. That's August price action, folks. No, I'm serious. Is August price action. If you look at the seasonal tendencies for August, it's really ugly. I mean, look who look at that. August. No expansions. July is the most expansions, but July, November, a little bit of October. Yeah. Well, let's take a look at what happened here again. So 9:30, we used that discount PD array, right? To open, react line lower. You guys saw it was expanding up higher. Oh wow, look how it only met just this pre-market high here from 7 a.m. Wow, barely tapped it, sold lower. That's wrong. It's almost 100 handles. Okay, so one thing I want to point out too is that we had that first percent of fair value gap at 931. So that here's a SIBI. We didn't even get to consequent encouragement, so that's showing signs of speed. Speed down to where? Down here. All right, so um, as you saw that big, humongous sell-off reaching out for London close, that was it. That was the reach on liquidity that we were aiming for. It didn't tap on CFDs, but it tapped on futures. You'll probably see this later on in the day. But yeah, it's interesting how it took so freaking long for us to get here, right? Like all the way down here. And we're not seeing a tap on it on NQ. I mean, on NQ we see a tap, but on CFDs we didn't see a tap, so that's interesting. But all in all, I was looking at this, right? Referencing two old highs. In between those two highs is an event horizon. So when we traded back up here, I'm sorry, it was this orange line and this yellow line. In between those two is an event horizon. After reacting from the first percentage fair value gap, price didn't even dare to challenge the consequent encouragement. So this is really weak. When forming this new high, if it's really weak and we don't want to re-challenge this, then this would be the event horizon. You see, if we divide this by half, you want to trade a trade above here, above 50%. That's the premium side of things. So then I created that new expansion swing slower. We had this balanced price range discount array that although we wanted to see bullish price action, which we did start to see in the first half, we also had this busy here that was rebalanced. So if this is balanced and this is balanced, we don't anticipate price spending as much time here. We have somewhere to be, right? So price reacted off the consequent encouragement of that, and then see here that we were trading above the consequent encouragement. The bodies are staying within, the wicks are just wicking, and then immediate sell. All right, at the beginning of the 1025 mini macro, heading down over to the London close. So we've definitely tapped here. We just haven't tapped yet on CFDs, but we tapped it here on futures. So I'm gonna just leave it at that there. Call it a good trade, whatnot. But yeah, looking to see what other opportunities lie ahead for the week. This was very interesting to look at, pan out nonetheless. But finally, seeing that breakout just leave us was a good relief. All right, well, hope you have a good one. Hope you like the stream, and